You have gone 0 days without a systemic contagion flare-up. What kind of a news article is that? I mean, come on, we just got through all of that nonsense, and now we're talking about systemic contagions, we're talking about banking bailouts, the stock market is going all wacky. This is just insane. I'm Jason with Realty ONE Group. Let's talk about the Phoenix housing market. Rates have defied industry analysts in going up over a point in the last month, and then all of this craziness happens, and now we're seeing rates pop into the 6.5 range for 30-year fixed. Now, this is for good credit and all the jibba. Talk to a loan officer to find out exactly what you can get, but really what you should be looking at as a buyer is that rates have plummeted. I mean, this is a pretty big 2-day drop to get to this point. We don't know where they're going to go from here. Maybe the Fed is going to drop the base rate instead of raise it in this next meeting. Who knows what's going to happen. Right now, though, if you're on the fence, this is an opportunity. So let's jump into our market, and what we're going to be looking at is our speedometer here. How fast are things going? So what we use to gauge our market is the Cromford Market Index. And what they're using is supply and demand to get kind of our speed for what's happening. And if you're new around here, below 90 is a buyer's market and above 110, and we start moving into a seller's market. Back in the last 2 years in the total height of the market, we were seeing numbers in the 500 plus range, which was complete insanity. I hope we don't get back to that because it's not good for anybody. Well, maybe it's good for sellers, but it's not good for the market. What we really want to see is more balance, but what we have right now is we have an imbalance between demand and supply. Both of them are low, but there's less supply than demand, which means that we're skewing towards a seller's market. So let's look at the demand side of the equation, and what we're looking at is listings under contract, or basically what are the buyers doing? And what you can see here is the brown line is the number of homes going under contract weekly. And what we have here is the lowest, or fourth lowest, since 2005. And we're kind of trailing off sooner than we would normally in a balance or normal market, or any of the last markets over the last 8 years. This might be shocking to some, but contracts are down 26% and the number of sales are down 27%. But let's talk about, from the buyer's perspective, a little bit of good news. The FHA mortgage insurance premium was recently lowered, which will save an FHA buyer on average $800 a year. Now, this is a nationwide average. Some of the numbers run in our marketplace are looking at potentially $100 a month or $1,200 a year, which from an affordability factor is huge, right? Let's look at the seller's perspective of what's going on right now. Active listings are dropping since the beginning of the year. And what you can see here is the red line is last year. We had that huge spike, over a 200% increase in the number of homes on the market. And then at the end of the year, it started to dip off. And that's when we started to see the true buyer's market in November. But since it's just continued to drop down off of the other side, when normally we would see more inventory coming into the market about now. Our days of supply, which is how long it would take for all of the homes to be absorbed if the buyers were buying and there were no sellers coming in, sitting at about 67 days on market right now, or 2+ months of inventory. The homes that are going under contract in about 32 days. You can see that last year we were looking at 7 days around this same time and 5 days the year before. That's kind of a crazy difference there. The sellers that are taking contracts are starting to fall in line with the idea that the market is coming back towards sellers. And we're seeing fewer buy downs, fewer concessions, and we're seeing lower concession numbers, which is a sign of seller confidence in the market right now. We're even seeing a return to a normal, in our market, list price to sales price ratio. And what that is that's the price that a home sells for after it was listed or after there was a price reduction, which we're also seeing fewer price reductions. And our current ratio is at 97.3%, which historically in this market is about where we should be. All that being said, we're not in a strong seller's market right now. However, this is not an opportunity for buyers to say,
show me the money, show me the money.
Yep, They're not in the power position that a lot of people believe that they were in when inventory was jumping 200 or 300%. Remember, we were jumping up from the lowest point that has been recorded in our market for the number of homes available. That's crazy. Anytime you look at the bottom and the top, there's gonna be a spread. We didn't even touch the top of the market, which would have been in the 2008 to 11 era of 50,000+ homes available. So let's not think about what that looks like. The best advice for buyers right now is to become educated, know what incentives are available for you from the financing side of things, try to get a seller to buy your rate down through a seller closing cost concession, but it's not the time to pin a seller into the corner because they might have another buyer lined up on the back side of it. Essentially, buyers should remain open-minded. Sellers, you need to be ahead of the market and knowing what's happening, pricing your home accordingly. If you've got a cream puff, it's perfect, you can price at the top of the market. If your home needs work or it's not set up well, or maybe your agent's not doing a good job, you're not going to get that top of the market. So be prepared for some negotiating. Let's take a look at what cities are moving with our Cromford Market Index by city. And what we can see here is that there are only 3 cities, I was going to say 2, but that's not right, 3 cities, Queen Creek, Maricopa, and Buckeye, that are technically still in that buyer's market region. There was a point where we had upwards of 15 of these 17 in buyer's markets. Now we only have the 3 and everybody else has skyrocketed to the top with an average change from last month of 20% in the positive, which we're talking about that market index, right? And you can see here Chandler is leading the pack at 202.6, 24% above last year. For comparison's sake, you can see here that we can pick on different cities and see, do they have a high supply, a low demand, high demand? What's going on in these areas that's giving them the index that they have? If you have a city that you'd like information on, drop a comment, shoot me a message. My information is in the comments and in the description below. There's one other thing to think about that's going to really impact this demand index, and that's what is happening in the market. Remember, we talked about all that news in the beginning, and there's a lot of fear out there. What? Fear usually leads to one thing, and what that is sellers not listing their home. Now, remember, if you're a buyer and you can't find a home, well, there's probably a seller on the other side that's thinking, I need to sell my house, and I need to find a house to go to. And they're over here like, what? Well, what am I supposed to do? And you can see here that we had the lowest in 28 years number of new listings coming on the market. Now, this drop here doesn't really count because we don't have a full week yet for week 11. So we're really only looking at the end of week 10 here. But regardless of that fact, the lowest number of new homes coming on the market, this is kind of mind-blowing.
My mind is blown.
There's a lot of fear in the market as to where we go from here. Ultimately, you need to make sure that you're looking at the data, you're staying informed, and if you need somebody to work for you as an advocate, reach out. I'm available. Until next time, we'll see you later.